Had to grab some stuff for Julie. And you know, the kids for Easter and stuff that's coming up. So I just needed to get up there real quick while I could. Um, but that's neither here nor there. Welcome in, everybody. As always, Monday is going to be quite the hectic day as we come through the weekend, a thinly traded weekend, and we came into a small opportunity. I gave out my one trade that I thought would be appropriate, and that's what I rode, but I'm already out of it. So it was a quick thing. It was a 5.1% trade, and honestly, to me, those are the key milestones when you're in a bear market. If we can get those 5 to 7% trades, and I was able to build up on my Kraken. It was about an $1,100 to $1,200 spot trade, and it was in XDC. I was very clear about it last night. I don't know if it's going to continue riding up, but I have no interest in hitting the exact top. But I talked about I'm selling out once it goes buy support, sell resistance, buy support, sell resistance. So once it hit this resistance this morning, I was out. Gave me a good about 5.5%. We've done it from here. Buy support, sell resistance, buy support, sell resistance, buy support, sell resistance, buy support, sell resistance till the pattern breaks out or breaks down. If it breaks out, can always buy it back on a retest, but that's just my philosophy in a bear market. The 4 hourly and the stochastic showed me it's significantly oversold, so it's probably meeting a wall. But I don't like to tempt fate when it comes to the USA. Could it bounce out? Abso-freaking-lutely and turn into a 10 to 12% move. But I follow kind of that support resistance until proven otherwise, and it's done me very well over the years. So that's what I stick to. I'm very happy with how it panned out. And now we got to see how it shakes out in the morning session. If we can have a continuation here, maybe we can turn out into something a little bit deeper. Now I look for opportunities elsewhere if something were to present itself. But it's just slowly but surely compounding those gains and trying to match out those 5 to 7% movements. It really does make a big difference in the grand scheme. I can tell my content is not pushing out once again, which is it kind of sucks. I didn't get any alerts at all. I have a hard time believing that there's only that many people in here if there's that many likes. But then again, you know, I don't know. I've been surprised before. Let's see. Yeah, I guess so. I guess there's just an extraordinary amount of likes compared to viewers, which is, how is that even possible? 33 likes and only 10 viewers. That's pretty interesting. I don't know if I've ever seen that before. That's pretty interesting, actually. If that's true, there's only 8 people in here right now. Wow. Yeah, this will be a very very small viewed live, apparently. None of my content's been pushing out recently. I know all my videos yesterday, I did too much work, and they only averaged about 600 views approximately per video, so I might have wasted some of my time, but hey, that's neither here nor there. So we'll discuss this. We'll go over what we're seeing here, and then if people decide to show up, they show up. If not, I just know that unfortunately my content is not being pushed out lately. So we'll just, I mean, 44 likes and 11 people. Something doesn't seem right here. How is that possible? Unless it's not showing me the actual amount of people in here. It doesn't seem to make, that doesn't even seem like it makes sense. 45 people and 11 people. That seems so off. No, I know. I'm having a hard time believing that we have 13 people and 47 likes. How is that possible? I'm just going to shut off that for now. I don't need to see that. I don't understand that. That's the biggest anomaly I've ever seen. I would say something's not, it's probably not, I'm going to say there's a lot more than 14 people in here. I think there's got to be some kind of misprint on there, or it's just not recognizing it through the algorithm, because it's impossible for me to have 47 likes and only 13 people watching. And there's a lot of comments, way more than 14. So it'll be interesting. But anyhow, let's get into this. Yeah, YouTube's very much messed up. Yeah, it's got to be glitching. There's more than 14 people commenting here. So, but anyhow, I'm not going to worry about that. I'm going to worry about the core that's here, and we're going to get to business. So, sound off. The sound is off. YouTube uses the same vote system as the US. Can you guys hear me? Oh, well, you must be able to hear me because you guys are responding to my questions. Oh, yeah, yeah, I can hear it. No, there's definitely a glitch. 50 likes and 12 people. I mean, it's gone up by 30 likes since I started, so. Um, 4 people like 50. Yeah, yeah, yeah. It definitely, yeah, you can definitely tell there's something going on with the algorithm. But anyhow, it is whatever. I see enough people commenting to where we can have a very, very, very. I found you. Oh my God, YouTube said you died. Watch value stocks this month through June. Be interesting. So what I want to cover today is we'll go through a little bit of the conspiracy. We talked about it yesterday with the escrow dumps and things like that. We'll talk about a couple of other things. I did not know Jerome Powell was speaking right now. I want to go over the XRP chart. We'll take a little bit deeper look at XDC to see if it can continue out of this descending wedge or if it's hit the wall to come back down and consolidate. I want to look at a couple different aspects. We've got the escrow dump coming on Wednesday. So I definitely want to make sure of what's going on there. See what kind of appreciation or depreciation we can have. Yeah, I that's what I'm saying, Craig. And thanks for being in Tom's Army for over 4 years with the XRP Phoenix badge. There's got to be way more than it's showing 10 people, but there's way. I mean, the algorithm is so busted right now. It's a kind of a shame. And that's how you get your content pushed out. It'll base it around how many people it's showing and statistics and things like that. How that's a great ratio, 10 people watching and over 50 likes, huh? I mean, wow, wowzers. It's almost like there should say 50 people watching and only 10 likes. But we'll look at Bitcoin. I got to do this in a defined order, but be out of here by no later than 11:30 because I got to do my live class today, and I want to set up some more stuff for the liquidity sweeps. I've got some great stuff for everybody for class 17, but I want to add to it as well. So I want to do about a half-hour prep as well. I've already done some over the weekend, but anyhow, that's neither here nor there. And what I talk about with the conspiracy for XRP, and we'll go over it real quick to start. When it comes to the escrow dump and how Ripple does bank and retail ends up holding the bag, so to say, and they end up paying the bill or flipping the bill. It's nothing that I haven't talked about before, but it's one of the things that we have to discuss openly. And you'll see why the price moves in the way it does for XRP, especially around the escrow dumps. And it's just small price movements. It doesn't even have to go up. It just has to go down after they were to sell out of those 1 billion tokens or put them onto the market. And then when they relock up 800 million, just a 3-cent move down makes all the world of difference. And when you start to see the profit margin and how much it can be over a 12-month period, it makes your head want to pop off your body, off your shoulders. So with that being said, good morning. 10:28 a.m. Eastern Standard Time on this Monday, March 30th, 2026. I'm XRP Future Millionaire, and I reside in the great state of Michigan. Yeah, I've noticed other YouTube channels that have even millions of viewers, like subscribers, and they're getting like 2,000-3,000 views, and I always find that pretty crazy. It just shows how little YouTube will push out to your active viewers. It's I don't know, mine says like 1.8% it pushes it out to, which is remarkably low. But that's just YouTube. They're trying this vertical crap, and I really do think it's ruining a lot of things because it changes the algorithm because they want you to be vertical. They want it to be like TikTok, which I hate TikTok. I think it's a plague amongst us all. But all right, so let's look at XRP real quick. So XRP, when you talk about the escrow, and we'll do this very quickly because I want to get on. But escrow, the escrow thought Trump was good. No. It's quite the opposite. See, everybody seems to forget what his basis running last time. He was against crypto. He's only for crypto when it benefits the Trump family. It's just the truth. But I'm not going to talk about politics because they're meaningless. He can't control it one way or the other, guys. That's just a facade. If you want to buy into the Fugazi or the Fugazi, you're just going to get yourself murdered in this market. So 1 billion tokens. Let's just say they sell them at $1.35. That's $1.35 billion, right? So now they relock up 800 million. So remember, they They got 1.35 billion if they sell 1 billion from the escrow. So that's $350 million over a billion. Just remember that. They lock up 800 million, and now the price, let's just say it's $1.31. So 800 million. That cost 1,048 million. Well, I mean, I'm not no rocket scientist, but that means they've got about $292 million in their pocket. And they've got all but 200 million of the tokens. So they got 300 million of basically in profit. Now let's do 200 million that end up being outstanding here. Whoops. Oh man, times. So we got to go back here. So 200 million, that's 262 million. I mean, at $1.31, that's how much they've had to really get rid of is $262 million worth. But because they're relocking up 800 million, I mean, you buy it back and you've got that discrepancy. So just say $200 million a month that they can clean house on. I mean, you're talking, a couple $1 billion a year just doing shady shit like that. Just think about that. So if you want to talk about why I don't believe in the long hold from bear markets to bull markets, because I don't want to fund things on the way back down. But what I will do is in the bear market is do like I did today. Just a simple trade with XDC, get in, get out, do some other things, and wait for that bottom to drop out, So it was, and I didn't do leverage on this move. Nothing like that. I just took remember I started with 21,000 on Kraken, turned it into 22, then 23, then 24. And now I had 24,100. And ironically, now I have 25,000, or I had 24,000 and some like 70 or whatever. But after the fees and everything, I have 25,122.20, 222. So that's $1,000 start to the week. And that's not expected. I assumed we could get 5 to 6% on XDC, just minimum on the way back up to and we'll start with XDC. Because I bought in this formation, and we've talked about buy, support, sell, resistance until it breaks down or breaks out. But it's got to break out and retest for me to be interested on. I push out. The 4 hourly to me, when it got up here on this 4 hour candle, I'm like, holy crap, that's way overbought. So usually when you get overbought like that in stochastic RSI, it's telling you you're overbought in the area. It is what it is. You don't really need to do any further discussion, but 31349 right now. It went up to 321. Right when it hit this pink line, I didn't even wait. I think it was at 3818, 319, whatever it was. And last night it was down here and we talked about it. That's when I had bought it because I was waiting for the support. I'm just buying support, selling resistance. It gets a little smaller every time as this wedge gets smaller in the descending wedge. And it very well can break out at some point here. But if it does, I've marked it over here, which means I'm expecting if it follows trajectory, it'd go from here and right back down to 2.9 if we're lucky. Then we can watch it again and see. But the closer it gets to mid-April, the more of a chance it has to break out. Not saying it can't break out now, but with the way the current market is, I'm not willing to ride it through those areas. It's just a simple strategy I use. I can explain it a billion times and a million times after that. And it might get lost on most, but I like the strategy of buy support, sell resistance. You've heard me say it a billion times. Once you can recognize a pattern and it's very clear, and then you do it until it breaks out or breaks down, and sometimes you get caught with your pants down because you buy the support and it just breaks down, and then you got to be smart enough to get rid of it. But look, buy support, sell resistance, buy support, sell resistance, buy support, sell resistance. And I did it here too, remember? And I think I did it back here, and here. But buy support, sell resistance. Now, if it breaks out and back testing, you got to make an educated decision. But I don't care if it breaks out. Good for you, XDC, but I'm doing this exact same. And believe it or not, every time, because you're compounding your gains and not giving it back, it ends up that 5 to 7% being a little bit more. So from here, it might have been 20 to, $20,000 invested. Here it was 24 and moving up. So it compounds on itself. So it's the same thing with XRP when we're looking at the descending wedge and the long-term pattern. And right now, I'm not expecting a whole lot out of crypto right now. So it's literally going to be the the trend is your friend. And right now the trend is down. So every time you hit resistance, you got to sell. And for XRP, we're looking at it in a similar way. So we're in a descending wedge in a much larger scale on the cup and handle all-time pattern. Sell, support, buy support, sell, resistance, buy support. And right now it's showing support here. And then you sell, resistance, buy support. However, I'm still waiting for a third tap down here, but in the recent, you've had this recency bias. That's why I haven't been touching XRP for the swing up, because it's got two different spots here, especially when it resistance support here. I have no idea if it wants to come down here, wants to go up there. So I've been sticking with what seemed more transcending and less aggressive with XDC because it's set in a very defined fashion. Now you can take your chances, but I'm not a big buyer of XRP when it's a swing buy. I'd rather buy XDC. It seems to move in a really unique way, and it's been doing it by the book. So XRP right now, daily's oversold, but look how the 4 hourlies and everything. Look how quickly they came up. It's absolutely astounding how quickly we got that overbought. Now, it doesn't mean that we're done railing. It could still go up, but when we get to a Monday morning and we get the market makers involved, I mean, you get all about Silk Road and these other places that will sell on the U.S. users around 11 a.m. Eastern Standard. 10:30 to 11:30 basically is with the clocks move forward right now is the end-all be-all time where you can get hurt really badly in this market. When the clocks were not flipped forward and they're back, well, then you start looking at it around 9:30 to 11. Now it's about 10:30 to 11:30, maybe 12. But this is the most volatile part of the morning, and we have to approach it that way. Until the trend changes, we should not fight. We shouldn't be fighting with Wall Street. We shouldn't be fighting with the market makers. You know, we don't want to bet against the central banks. We want to take the breadcrumbs that they give us, and we want to start feeding the geese, so to say. And we're the geese. We're the ducks. We're the birds. You know, we are able to make some gains here, but we've got to be smart about it. We've got to be smart about it because we only get one chance and we're still in a bear flag. So, and then if you look at this even farther, we've got our liquidity gaps that we talk about. And I mean, we stretched out here a little bit. We didn't quite make it all the way up. We even got $1.36.5 on this push up. And now we're coming right back down. This is our liquidity zone below. Now, are we building an inverse pattern? Well, that's what we need to see. We need to see if this is an inverse pattern or if this was just a fake out onto the top side. If it's going to hold, it should probably hold the neckline. And I mean, if you can even call it a neckline, which I will, you got to hold this. It's funny because it's right there as we speak. So you'd want to hold that. If it comes below that downtrending support structure, just consider that a breach and a failed breakout attempt, you know, from this little region. But right now it's doing what it needs to do. It's back testing. And we'll see if it's a back test or a breakthrough. So, you know, you got to be very defined in what you're doing right now. And don't get too aggressive. And, you know, if you're in shorts or long leverage, I mean, yeah, you can do that. Just be careful. You know, be aware of what's in front of us. Do I think we can get up into the FVG zones? It's going to be tough right now. You got all those lines of resistance ahead of us with gaps and liquidities and things like that. Bright Future Freedom, Crypto Cooter, welcome and thanks for being in the army, my friends. Bright Future, and Mrs. Stott, thank you for also being 6 months plus with the XRP Predictor. Mr. Stott as well. Isn't it amazing? It says there's only 5 people watching, and we know that's not true. I wish I knew how many people were watching, because I don't usually have this many likes so quickly. I mean, they have 70 likes already is pretty insane. We've only been on for 19 minutes. I mean, the likes are doing great. Likes are doing great. Look how many people are in here. YouTube is definitely screwed up this morning. So, I mean, you can't even count on how many views they say you get or how many people are watching. That's the shady part of YouTube these days. I imagine it has something to do because they don't want to pay the influencers as much, but, you know, that's neither here nor there. My audience is a big part of my income from the pay it forward mentality. So YouTube, I don't make much off of them. Which is partially my fault because I don't use ads all the time. But now they're forcing you to put them on, which it is what it is. But anyhow, we've got all these levels that we need to discuss, that we would have to break through. We've got this head and shoulders pattern, and first layer would be to try to get past this $1.38, $1.39ish and move up to that $1.43. I talked about it in the short video today. But right now it's doing the standard thing we normally do on a Monday morning after a nice tug up. Things just seem to just give it back for the most part early morning. Like XDC's come down almost 1.5% now. XRP's come all the way back down from $1.36. Carl, thanks for being in Tom's Army over 1 year at the I Told You So Bad's, along with 1970 Legend, our Buckeye. Very trusted mod as well. Carl says other platforms push trends. If they do not want crypto pushed, they do not push it at all. YouTube is falling. So absolutely. And if you've noticed with my channel, one of the biggest things that I get gaslit about is, when you're factual on YouTube, they don't want to push you. They'll push these other channels that are lying to everybody because they know that's where they get the exit liquidity. But a channel like mine where we're speaking truth and we're finding error, like look at the opportunity we found with XDC. I gave you a perfect opportunity last night in the live. I discussed it for 8 or 10 minutes. And right when I was about to leave, I said, listen, this is the plan. You buy support here and we're going to sell resistance. And I showed the support resistance, and it did it without fail. So I also talked about if it broke that recent low, because that would have broke down below the descending wedge. Well, obviously you have to make a decision, but I'm not messing with this market. It gives me that quick swing trade and I make 5.5%. I'm out. Doesn't seem like a lot, but when you start compounding your money or your currency on the exchange, a quick 5.5% move turned into over $1,100 trade. And that I literally had it open from the live last night until before the live this morning. That's less than like a 12-hour hold. It's like a 12, 13-hour hold and done. And now whatever the market wants to, I couldn't care less. I just have another $1,100 almost on the exchange to do with what I see fit. I like to compound it. So now that, like I said, last week I was waiting for that next 5 to 7% opportunity. I got it. Now I'm waiting again. You can make a lot of money in the bear market. You've just got to be, and you got to do it within a pattern bottom. And right now, that pattern descending wedge, the bottom showed that was at least in the pattern. Not that it was going to break out, guaranteed. But at least I thought it would come back up to the resistance until it proves otherwise. And now with XRP, this is exactly why I don't like to do longer holds. XRP even came up to $1.36. And now before you can even blink, if you were somebody who bought it because you just woke up this morning, you're taking your piss, taking a shower, doing whatever you got to do. Now, you could be down 2.5% already just before you could even get to work. And then the funny part is it could come right back up and then you would have sold out for 2.5%, 3% loss. And then all of a sudden it comes back and retakes it. And with the escrow dump coming Wednesday, expect the unexpected. And Jerome Powell, somebody said, was speaking. What was this clutch speaking about? Jerome Powell live. Let's see.
And it does provide some support for economic activity. And I guess I'd be in the camp of thinking that there's something in that, but it's hard to quantify it.
Do you guys want to listen to this guy for a second and see what we're talking about, or do you want me to skip him? We can watch it for a minute. We've got time. Do you guys want to watch him for like 10 minutes and see what the gist is so we can kind of stay in the loop? And then we'll go back to the charts, or do you just want to skip him today? I'll leave it up to the audience. Watch him for a second. We can do that. We can definitely watch him for a minute.
I think, they're in different people have different views on how much those effects could be. The other side of it is, QE is thought by the critics to risk all kinds of other things. So, for example, you could buy too much of the treasury market and it would stop functioning well. We have not seen that here. At the very beginning, there was a thought that it would be inflationary. We have not seen that, or that it would threaten financial stability or even create inequality. So we haven't really seen the downside risks. At the same time, the last thing I'll say is, I remember before I took over as chair thinking, I'll almost certainly never have to do quantitative easing. So what's that expression? Man plans and God laughs, something like that. So it just, the pandemic came around and we needed to do a lot of asset purchases in a big hurry, and we did. So far, no Treasury Department has ever said, stop doing that, you're supporting the economy too much. Maybe that'll happen someday, but hasn't happened yet.
So let's talk about the dynamics of inflation since the spike in 2022. Inflation has been coming down.
Actually, we caught it at a perfect spot because they're talking about QE, and this is very important for and that was kind of hawkish. His take said I won't have to worry about QE anymore. So, we want to make sure we're watching this for cryptocurrency. So we caught it at a perfect time.
Down since then, but it still hasn't reached its 2% target. Some have argued that that last mile is extremely difficult, and to obtain that, we will need a recession. Others have argued that you've gotten us very close and you'll get us the rest of the way. Are you concerned about the time duration of the path from the high inflation of 2022 back to target? It's taken time. We're not there yet. Is that a destination we'll reach, or are you concerned that the last mile will prove very difficult?
So we will reach, the FOMC is and will continue to be committed to getting inflation back to 2% on a sustained basis. That's the place to start. So I feel like we had pretty much gotten there at the end of 2024 against the predictions of almost the entire economics profession. When we raised rates a lot and very quickly in 2022, 100% essentially of economists were forecasting a recession. We didn't have one. Actually, we had 23 and 24 were both very strong years as the supply side healed and as our higher rates had some effect on inflation. So by 2024, you had the economy growing at 2.5%. You had inflation in the 2 plus a few tenths on a 12-month basis by the end of the year. And you had the employment market, you still had the labor market at essentially full employment. So I would call that a soft landing. We had it there. Then since then, we've had to face a much smaller source of inflation, which is the tariff inflation is visible, and we think it's really just a one-time price increase. That's been our thinking since the beginning. Right now, we think it's adding somewhere between 0.5 and a full percentage point to inflation, but that's a much smaller thing than we saw during the pandemic inflation. And and of course now we're facing events in the Middle East, which will certainly affect gas prices, and we feel like our
respectively, for everybody who says to skip it, this directly involves risk assets. So I'm not skipping this part. Maybe in 5 minutes I'll skip it, but not when he's talking about QE and inflation. This directly is a result on risk assets. So you got to watch this part respectfully.
Policies in a good place for us to wait and see how that turns out.
Great. So let me turn to the current crisis in the Middle East and the effect on energy prices. Indeed, this classroom is familiar with that question from the last problem set, where we asked, how would you advise the Fed to respond to the rising price of oil? And we teach that when there's a demand shock, it's a pretty natural set of recommendations that emerge for the Fed. But when there's a supply shock, like this energy price shock, there's trade-offs that the Fed has to juggle. How do you make those trade-offs in general, and how do you make those trade-offs in this particular instance? And can you help everyone with their piece of it?
Well, maybe they should tell me. Sure. So it's you start with what you said. Our tools work on demand. Higher rates will tend to moderate demand. Lower rates will tend to stimulate demand. And when you have a supply shock, our tool doesn't have meaningful shorter-term effects on supply. So when you have a supply shock, the first question is, do you respond to it? And the classic question has been around energy, just in general, not really speaking about the current situation, although I'll get to that, I guess. But, energy shocks have tended to come and go pretty quickly. Monetary policy works with long and variable lags, famously. And so by the time the effects of a tightening in monetary policy take effect, the oil price shock is probably long gone, and you're weighing on the economy at a time when it's not appropriate. So the tendency is to look through any kind of a supply shock, but a critical, essential aspect of that is you have to carefully monitor inflation expectations, because you can have a series of these supply shocks, and that can lead the public generally, businesses, price setters, households, lead them to start expecting higher inflation over time. Why wouldn't they? At the end of a certain number of years, the inflation is now just higher, and that can happen. So you monitor that very, very carefully. Also, in the current situation, you have to be mindful of the whole broader context. And the broader context is we're still, we've been coming down close to 2% post-pandemic, but we've never actually, gotten right and stayed at 2%. So it's been a while. And we're very mindful.
Never even came
of that
close to
fact.
2%.
Inflation
I mean,
expectations
these
do appear to be well anchored beyond the short term, but nonetheless, it's something as we will eventually maybe face the question of what to do here. We're not really facing it yet because we don't know what the economic effects will be, but we'll certainly be mindful of that broader context when we make that decision.
Great. So you've been a powerful and vigorous defender of the independence of the Fed with respect to monetary policy. You've also been collaborative with administrations with respect to financial regulation. So under President Biden, you collaborated in a program of increasing regulation. Under President Trump, you've worked together to reduce regulation. So on the one hand, we've got an independent Fed with respect to monetary policy, and on the other hand, we have a collaborative Fed with respect to financial regulation. I don't think there's a tension there, but can you explain to us?
While we're listening to them real quick, make sure if you want to join the classes and get through the archive and things like that, you got the links here on YouTube. 17th class starts today. You've also got BitUnix if you want to do leverage. You've got Spot on Kraken, other things on here. So just make sure you're aware of that. But this is important, so I'm not going to interrupt anymore.
There's two different approaches and how you understand them.
Yes, so start with monetary policy. I think there's pretty broad consensus in both political parties on both sides of Capitol Hill. And our oversight, by the way, is Congress, not the administration. But pretty broad agreement that on monetary policy, the Fed needs to be fully politically independent, not reactive to political things at all. We just need to do our job and stick to our knitting. Regulation is a little bit different, especially since Dodd-Frank, where the Dodd-Frank Act created something called the Vice Chair for Supervision, who has a specific statutory assignment, which is to oversee all of supervision and also set the agenda for regulation. So the Vice Chair for Supervision, if she wants to propose a change in, for example, the Basel III Accords as implemented in the United States, she has to bring that to the Board of Governors, which is the 7 governors, and vote for it. But she has full control over supervision. So as chair, the whole idea is to be non-political and not, never working for or against any political party or individual, or never even considering things like that. So I think the way the law works is the chair should allow the vice chair for supervision to carry out the role that Congress has assigned to that person by statute. And that's what that is. So you'll see, and the two parties really have a big difference on regulation now. So I like to think that the chair should always be someone who is working without regard to political, and should be therefore a person who can be reappointed by either side. That's always been the case. It's been, Ben Bernanke was reappointed, I was reappointed. And I think it's a good test of the Fed's nonpartisanship that your appeal is really bipartisan. I think that's a critical thing. So if I were to try to impose my personal views on regulation, that really wouldn't work. So I think there's
his whole fucking job.
But any chair
That's
needs
kind
to
of funny
let
that he
the vice
says
chair
it
for
like
supervision
that.
take the lead on those issues, and then I'm another voter, is what I am.
Great. So let's talk about Dodd-Frank and the reforms to the financial system. 2008 was a terrible crisis, and there were many efforts made in the years afterwards to tighten the bolts and create a safer financial system, less prone to these kinds of cataclysmic events. But today we look out of the world and we see lots of threats, both inside the formal banking system that you regulate and in the non-bank financial system, which is lightly or not at all regulated. So I wanted to have your thoughts on whether we're in a position of relative safety after all the Dodd-Frank and other reforms following the 2008 financial crisis, or whether the new threats actually have brought us to another period of concern. And just to illustrate with a couple examples, inside the banking system, there's commercial real estate that has fallen in value. That affects both the banking system and non-banking financial institutions. We have the private credit market and a very active debate about its health. We have concerns about cybersecurity in the age of AI. Do you worry that another financial crisis looms out there? Of course, there's always a possibility, but is it something that's
If a financial crisis looms, isn't it funny how they talk? I mean, what, isn't it going on right now? Hasn't been going on for years? Like, I know they try to, I should stop talking. Let's just listen.
issue of high alert, or do you feel that we're putting all the pieces in the right places?
You know, after the global financial crisis, we actually started a new division called the Division of Financial Stability, and their job is to be, you know, sort of the watchers of all financial stability issues all the time. So we're not, the old system was a crisis arrives, we get the team together and we battle the crisis. This is much more of an ongoing monitoring thing with a framework that can be checked. So I would say after the global financial crisis, which happened when you all were extremely young, between Dodd-Frank and the Basel agreements, we pretty dramatically raised the amount of capital and liquidity that the largest firms and other banks have. And I think that's been a good thing. I think they're also much sort of more transparent and more aware of their risks and that kind of thing. So I think we've significantly hardened the system against the kinds of things that happened in the global financial crisis, where you had a lot of credit losses really around mortgages. And so that kind of a situation, we've got well capitalized large banks. But that's just one part of the financial system. The capital markets, the US has by far the largest capital market sector relative to the banking sector. The other countries still have a much bigger banking sector relative to their capital markets. And, you know, that's going to be less well regulated, and that's a good thing. You want it to be the place where biotech companies can do IPOs, and they may or may not succeed, but they can get capital out of that market. And you know you're taking a lot of risk, but great things happen because people put money into biotech. So we've done some hardening of that, but we shouldn't be trying to regulate risk out of existence. So I think we did fix some of the things that broke in the global financial crisis and the pandemic. We did address. The real thing, though, is the economy. I mean, sorry, the financial sector is just always evolving rapidly, and I think the vigilance is what you need. You just need to always know that there's another thing coming, and I think in particular we've had all kinds of financial crises, but we've never really had a successful cyber attack on a large financial utility, let's say, or financial institution, and that would be quite a different thing. You know, if people are going to lose money in a certain part of the economy, we have a hugely resilient financial system now. It's more, let me say this, it's more about resilience than it is about avoiding crises. One of our former people used to say that we're in the levee building business, not the hurricane prevention business, right? So there are going to be hurricanes, and they're going to come, and you just have to assume you won't know what direction or what the nature of it will be. So you want a highly resilient financial system, and we do have that. But again, nobody who's in that business will ever give you a green light. They'll always say, here, these are the risks, and we've got to monitor. You mentioned private credit. So private credit is something, as you guys are probably following, it's a relatively small part of a very large asset pool. We're watching it super carefully, as everyone is. We're talking to the people in the industry and investors and everything. I think we understand it. We're monitoring it. For looking for things that might lead to greater contagion or greater losses or connections to the banking system. And, you know, we're going to do that. You're not going to hear people say, oh, there's no problem here because that's a jinx. But nonetheless, it's something that we're following very carefully.
What is one of your biggest regrets in your time as Fed chair? And on the other hand, what is something that you're very proud of?
You know, on regrets, I don't allow myself the luxury.
Dana, if I didn't know any better, I would say that he just basically put it out there that there's going to be some kind of cyber attack to an institution, a significant institution. I mean, they always have to tell you before it happens. I mean, this almost sounds like that was a warning shot. That's something, look out. Something's gonna happen.
Of that. I think it's really important that in my job, I'm focused on the windshield and not the rear view mirror. And so I'm tempted to say regrets. I've had a few.
I think so. I think we're gonna get a raise of rates at some point.
Not so many, or whatever the line is from.
I agree, Dana.
Song. So I just think I'll have plenty of time for that after I'm out of this role. But honestly, you just have to keep looking at the next thing. You can't be berating yourself for the mistakes that you've made. You're going to make mistakes, and you're going to learn from them. Take it from an expert.
Wait a minute, I thought you don't make decisions. How can you be an expert? He just said it in the beginning. He doesn't make the decisions. He said he gets a vote. That doesn't make him an expert. That makes him a dummy.
Let's go for it.
Yeah, let's go.
One of the controlled arms.
Basically, I'll just say it's an incredible honor to do public service, as many of you will find out at some point in your life. I always wanted to do some of it. I saw these people around Washington who were well-known public servants like George Shultz. I would think that looks like a really interesting thing to do. It's different, in the private sector. I love my years in the private sector, but there really is a feeling of what you're doing is ideally helping all Americans and that kind of thing. It's a great honor to serve the public, and particularly in a job like this. So that is the main thing I'm proud of is 14 years at the Fed and 8.5 of them as chair. I'll always be proud of that.
And I'm very grateful to you for your service to our country.
Thank you.
So if you were willing to share publicly some advice that you would give to the next Fed chair, we'd love to hear it.
So one thing you will learn when your children are grown up and they have their own children is never volunteer advice. Only give advice when asked. So, and I would only give advice if asked, and I would do it privately. But I'll just say in general a couple things about the
You're
Fed.
the Fed. It's not. You're the Fed chairman. It's not supposed to be in private.
To stick to your knitting and to stick.
What a
to
bunch
the
of
things,
falakis. What a
that were actually
balaki.
assigned. There's always a
Fugazi.
temptation to want to move into other areas, and I think we have very powerful tools. They're supposed to be for maximum employment and price stability and financial stability. There's always a time when an administration looks and says it would be good to use that tool for something else.
Oh, and Almery gets paid a lot of money to do so. Read the Fed script.
Happens all the time, and we just have to be in a situation where we're not trying to work against any politician or any administration, but we have to be careful to stick to what we're doing. The other thing is, I'll just note that the Fed's not a perfect institution. Don't look for perfection. What we do is very challenging and highly uncertain, but it's a great American institution, and I'm very proud to work with the people I work with. They're extraordinary, right across the board, an incredible group of people, and I'll just close by saying it's very hard to build great democratic institutions and much easier to bring them down.
So, though you were uncomfortable giving unsolicited advice to your successor, I know that the students in this room would love to hear your advice. They've asked me for my advice and asked me what you would advise them. So they're entering into an uncertain time, an economy where new job formation is lower for many reasons.
Imagine they're at Harvard doing this to the most backwards university you could ever go to. A fucking joke now. Anybody who went to Harvard, it's not a badge of honor. It's a badge of fucking control now. Excuse my French. Harvard is not what it used to be. It's like the single worst Ivy League now. They're so manipulated by the Fed, and they have no voice of their own because they just take a whole bunch of hand-me-outs from the government, that they don't have a damn clue at Harvard what's going on. If somebody said they had a degree from Harvard, I'd skip right the fuck over them, because that would be the most controlled person you could get.
In particular, jobs that were plentiful a couple of years ago for students coming out of college are no longer so. And AI sits as this remarkable technological transformation that is both promising and existentially threatening. So if you're advising
What a joke.
600 students that sit here today, what would you suggest they think about as they embark on both academic and then ultimately professional careers?
Let me start by saying that I'm well aware, and my colleagues too are well aware of the current situation for students coming out. It's a time of very low job creation. And also you have AI going on. You've got the effects on job creation of significant changes in immigration policy, which have brought down both demand and supply of workers. Really low, but that doesn't help you if you're coming into that kind of market. So it's a time when.
Why not? They went to Harvard. They should not worry about unemployment,
business,
right?
I mean, there's a business cycle, right? And you're coming out in the business cycle at a time when getting hired is a little bit challenging. There's also probably something more longer term, more secular that's happening and around technology and AI. So yes, it is a challenging time, but I'll say a couple things. One just is that the U.S. economy, compared to other major open economies and big market-based economies around the world, is just incredibly dynamic.
How about this, guys? I'll tell you the truth real quick, and then we'll listen to this scumbag. Why do you think cryptocurrency was created? It's more clear to me than ever. The mining stations, so they can convert them into data centers for AI. That's all cryptocurrency was for. Think about it. They've got all these different things that use electricity, and it's already set up for the Bitcoin mining. All they do is strategically convert them. The miners say it's too expensive, and they convert them to data centers. There you go. I just gave you the grand conspiracy of cryptocurrency. They created it under the false illusion that it was going to create a revolution. In fact, it was only put here so that they could have easy storage data centers for AI in the new robotic age. There you go. It's over. You don't even need to think any clearer.
And productive. Since World War II, U.S., compared to other, again, large mature economies, our productivity has grown at like twice the speed, for example, in Europe, and higher productivity is the way,
that's my conspiracy, and I'm sticking to it.
Over time. So it's an incredibly flexible and dynamic economy. It reinvents itself. Technology, it always comes from the United States. So just be optimistic about the medium and longer term. I'm very optimistic about the medium and longer term.
Yeah.
And the other thing
Absolutely.
is, my observation is that, these large language models make.
I love this audience. You guys are so smart.
I feel like it's making me more productive because I can learn things really quickly. And I talk to, my son and others who are out there in the world, and I think if you use it well, it's making you more productive. So I think you're in a situation where you need to invest the time to really master the use of these new technologies, and that should stand you in good stead. But there's no denying it's a challenging time to enter the labor market, but it may take some patience.
This guy, man, I swear.
In the longer term, this economy is going to give you great opportunities, and just be a little optimistic about that.
So when you talk about the longer term, are you talking about 10 years, 20 years, 40 years? Are you worried that there'll be wind at our back as we use these tools over the next decade, but at some horizon, let's say 40 years, there'll be substitution rather than complementarity?
It's so hard to say. I mean, a lot of people, you talk to business people, are talking about, the sort of the next few years being big years for AI to come in, but they're mostly talking about existing, middle management, back office jobs and things like that. I don't think it shouldn't have those kinds of effects on people who can use AI well and that kind of, I don't know. But so certainly the next few years will look like whatever the effects are, we'll start to feel them, because major US companies, and we talk to a lot of those people who run those companies, and they're all looking at what they can do. And the truth is they can take out a lot of jobs that can be automated by a very smart large language model. They just can, and they will. Because their competitors are doing it, and they can't afford to have higher costs than their competitors. What's that going to mean for you? It may not mean that much. It depends on what you're going to wind up doing. You may stay in school a little bit, and you may do something that is, it's going to create new jobs too over time. And again, it makes people.
For who, the robot?
I did talk to a CEO in tech world who said the marginal benefit of a new employee in this world is actually very high. Now, that's not what you hear all the time. So. I don't know. I mean, when, if you look back through history, to generalize,
it's funny. not actually funny, but who said that? Carl. You know what's ironic about that? They did a thing on, I think it was Black Mirror, where they did exactly that. They had a thing where they were mining for power, but through the cyclists, so through like cycling and exercise machines like treadmills and bikes and things like that. And it was actually harnessing the energy, and they were paying them so much per day, per hour, per kilowatt they generated, and it would go into like a credit account, because we're in the digital era with that kind of stuff now. And that's actually something they projected onto us some time ago. It's pretty scary when you start actually looking deeper into it. But I absolutely agree. We're going to become man, oh man. Just think about our body makeup and how much energy they could actually harness through us. That's an even scarier thing. What if we become the mining rig?
This has been going on for a couple hundred years. Since the loom was invented, right? And to put all the people who were doing weaving out of business. But so in all cases, it has wound up raising productivity and raising living standards as long as the society keeps producing people who have the skills and aptitudes to benefit from that technology. So
all right, Jerome.
The case here.
We've listened to his shenanigans long enough. We got about 10 minutes left here, so I'd like to run down the market real quick. Look, it's starting to become more accurate now with how many people are watching. That makes a lot more sense. But yeah, there's been a lot of interesting issues with YouTube lately, huh? How does the escrow dump affect the price fluctuations? Will be eventually level out? It affects it, but not as much as everybody thinks. When it's really going to affect it is December of 2028, when every single one of those tokens locked in escrow are allowed to be dumped onto us at once. That's the true testament is going to be, we're not going to be happy in December of 28, more than likely. But the other caveat here is they're already, through a new rule they put into place, they're now allowed, and this is in the past few months, this has been into play. We talked about it at the beginning of the year, and the end of last year, how this was going to happen. But they're allowed to now basically guarantee to the institutions and the bigger players, the market makers and the institutions and the central banks and all the ones that they line up for them, they're allowed to promise or give them without payment these tokens. They're allowed to guarantee these tokens from escrow that are locked up to these players. That doesn't mean they buy them on an exchange. Remember, that's through the dark pools, and those are high frequency traders that end up using supercomputers. So that is where the big differential will come. Right now, it's just noise. Yes, it creates our inflation, but at 200 million tokens a month and 2.4 billion a year, I mean, that's still, everybody's, 800 million gets locked up. That still puts 2.4 billion worth onto the market in one calendar year, does it not? When I first started on YouTube, there was less than 40 billion XRP tokens. Now there's over 60. So, it's just like printing the US dollar. You're artificially inflating the supply, but you're not actually selling them out to the institutions. You're selling them to the market. So the institution gets them and then they just sell them back onto us. Nobody knows what kind of deal there is. They could be giving them to them for free for the future rights and telling them, you can sell them now. There's so much crap that goes on right now. That's why over 80% of orders in 2026 are fake orders on the retail exchanges. They put fake low bids and fake high bids, and then they cancel them out once it hits certain sections. It's a crazy anomaly, not anomaly, but it's a crazy differential from when I started. I've told you guys from the beginning, Brad Garlinghouse is a piece of, what? Him and John Deaton, who used us to try to run for the Senate, right? I mean, all these people are all scumbags. You might as well just put Jake Claver's face over them all because they're all the same person. They all represent the same scummish shit. But the reason why we need to take advantage of it when the time's there is because there's opportunity every time. It doesn't seem like it, but there's always an opportunity in a bear market. And you're going to get the volume that's necessary to make 5, 6, 7x every single time for XRP when it goes through a cycle. Without fail. Whether it's much lower the time than it was before, that remains to be seen. But if you do it properly, Jake Claver's a scumbag. He's doing this to make money off of retail. Are you kidding me? I hope that's a joke, Smackamation. He had so many lawsuits filed against him in 22 that if you even realized that, you would bash your head through your own screen every time he came on. He literally got rich off of all of us, the hopium crowd. How many times does somebody have to repeat it's going to $1,000 and be wrong before you realize that he's a scumbag? There's one person who's honest to you in crypto that'll tell you it this way, and it's me. And I'm not tooting my own. I know you are, Smackamation. He doesn't believe it. He doesn't believe it. He's basically loans out all of this to people now. And do you know how much money this guy's made off of retail stupidity? If you knew how much he made off of all of you just by watching his videos and commenting and perpetrating his bullshit, you guys would be ill. You would be ill. I'm talking hundreds of millions of dollars. Probably approaching $200-300 million now through his deals and every. Oh, you'd be disgusted when you see his deals he has. Oh my God. All of those people, you'd be absolutely horrified how much money these people are making. And now I'm not at that level, but I've been offered some pretty crazy figures that I won't ever accept. I told you, somebody was willing to buy out my station and have me as one of the personalities, and they were offering a significant amount of money. Oh, I've shown you my own stats and some of the offers I've gotten, and it made some people sick. I've shown about, I don't have time for that douchebag. Go look it up. Go look up his lawsuit. Go look up his sponsorships. Go look up his partnerships. Go look who runs the station. I used to say the same thing about BitBoy, and everybody used to laugh at me when I said he was only an entity of his own station because he sold his soul. So then they kicked him off his own channel. Canvas Podcast, they qualified for the same way that I could have qualified. You sell yourself out and you basically put your audience on the hook, and they get hammered. You get enough people doing that, you can push any narrative. I get so out shit. Look how I can put out the truth for over 5 years straight without missing a day, and no matter what I say, they'll always say, well, Jake Claver said this. Blockchain Backer said this. All these other scumbags said, I mean, it's just the way it goes. I do believe XRP at some point will get back below $1.30. If we can't break out of this resistance over the top here at $1.39, it's going to be quicker than later. If we break that $1.33 to the downside, you're probably okay. If not, we could push up to anywhere between $1.38 to $1.43 approximately. So be careful on shorts, but at the same time, I mean, it hasn't broke out past anywhere but a bearish consolidation. You know, these were bearish taps, needed to happen. Look at Bitcoin. I know that because I put the bearish rejection zone for all of you a few days ago, and look at how it, like, you can't make that up. You guys seen when I put this. And if that's a spinning top there, well, that's a problem. But I put that there days and weeks ago for everybody to see. And look at it, came right up to the possible bearish rejection zone for a short entry. That's a possibility if it can't get above 68 right there. If it does, then you got to deal with 70 and then also the possibility of 74 because there's a huge liquidity burst. Now, if we get up into here, it could be a pattern reversal to tap more topside liquidity. I highly doubt we're going to get up there, and I like your $1.57 level. But that $1.56, you know, in theory, is that descending triangle. So that's still a scary area because it could get rejected there. But the odds are if it comes back up there for XRP, we're going to tap that $1.70 gap area. So, but we got a lot more stuff to talk about later. I've got to get my class set up. I've got a lot of stuff already set up. I wonder how many people were actually here during the live. Now it's at 97. Remember when I was at 78 likes and it said we had 4 people in here? I mean, that's one way to shadow ban me. By doing that during the live, how they did that through the algorithm, it doesn't push the content. They're like, oh, 70 likes and only 4 people watching. Why would we push this? No one's staying. And now you see by the end, there's 100 people it's saying. I wonder how many it actually was at the beginning. Look, I worked for free today. No donations, no super chats, no new members of Tom's Army. No, I'm just kidding. Nobody ever works for free. It's a continuous groundwork we're laying here in Foundation. My algorithm has been suppressed since day one, unfortunately. Once they realized that I wasn't going to be a finesser and I was going to tell the truth, and I gave reality so people could actually make money in a risk asset. See, they want me to say, be a hodler, diamond hands, hold no matter what, buy no matter where. Nader asked about joining classes. Oh, really? I didn't even see that, Mrs. Stott. So if you want to join the classes, today we have our 17th class. Can you even believe we're on the start of month 3 already? It doesn't even make sense. So in this very video, in the live, if you go to the comment section, if you want to know more, there's a link right there where you can click on the YouTube, and then it goes to membership area. Once, if you upgrade to it, or if you sign up for the classes, they're $49.99 a month. I teach them through Zoom. They do it through Zoom. Or I do it through Zoom, but you get to watch it through YouTube. It saves you a hell of a lot of money by doing it that way. And then you get this archive right away. 16 videos right now. There's got to be 25 hours of learning already. I do them in phases. So each phase is in their own, it's like their own lesson plan. The the first phase was DNA of Money and the Great Transitioning. And I do great artwork with AI's help so that you can see all of this, a real representation. Phase 2 was the purpose of investing in wealth preservation versus generation. Phase 3 was market ecosystems. Who are the players, retail institutions, market makers, and central banks? And we added certain things in here that are outside the lesson plans. When people would ask about certain things, I would start out or do extra lessons based around them. And then phase 4, I'm so excited about. And that's how markets actually move. When we did our first class on Wednesday. Today, we're going to start with liquidity sweeps, because there was a lot of questions about them. I have a beginning, mediocre, and advanced breakdown all within the same framework that you guys are really going to like. I've got a few graphs and charts and line graphs, and you guys know how I like to do it with the charts. And then eventually we'll get into the big movement of how to trade on an actual chart. But we've talked about all of this. We have to build ourselves into a proper trader before we can ever open up an exchange and things like that. And we'll be doing some case studies together. We'll be doing leverage trading together and things like that. Did you all see the latest XRP influence predicting it? And look watch how many views they're getting. Watch, if I came on here every single day and I said, I guarantee $750 is coming by the end. Do you know how many people would watch this? It'd be laughable. So, it's laughable. Yeah, I've been on for over an hour, unfortunately. And I got to get some of my stuff for my class finished up. So I do have to go. Be blessed, everybody. But it's just laughable how this goes. It's laughable. But I recommend everybody, if you want to know the truth, you want to understand how to become a better, not only crypto trader, but be better with money versus currency, and understand investing and the reasons why staying in a savings account at times is bad and sometimes it's good, or staying pad is actually going to cost you. There's so much information in here, and this is going to be indefinite. As long as I have enough people who are coming to the live class, I'll do it live. If it ever comes to a day when there's nobody there, I'll just put it out myself. I'll still do it live. I don't care. We have 44 beautiful members in here. One person had to cancel because of the way it works on Apple. So they had to cancel it and they can redo it. I think it was Emerson. One person left the class. They didn't say why, but that's okay. Not everybody's going to stay. I'm just thrilled to have so many people sticking with it into the 3rd month. But what we continue to go into, it's not like the last. Like, there's so much information here. If you want to be part of the live class, you can join 12 to 1 Mondays and Wednesdays, Eastern Standard Time. But otherwise, you can watch the archive. It's got the live commenting on, so you can see what everybody's asking. You'll feel involved even if you're not there in real time. So be blessed.